A lot of business owners outside the US assume that owning a company in the US is something that you need a visa or a green card for. You don't. You can own a US LLC from anywhere in the world without being a citizen or a resident, and plenty of people do exactly that so they can work with American clients and get paid through US banking systems. Setting one up is pretty straightforward. Keeping it in good standing afterward takes a bit more attention, and that second part is really what I want to make sure you understand before you start. So let's walk through the whole thing, from picking a state to the filings and what you'll need to keep up with when signing up for a US LLC. First things first, can a non-resident actually even do this? The answer is yes. If you're not a US citizen or a resident, you can still legally form and fully own a US limited liability company. There's no citizenship or residency requirement to be a member, which is just the word for an owner of an LLC. An LLC, or a limited liability company, is a business structure that legally separates you from your business. If the company runs up debt or gets sued, your personal assets are generally protected. That protection, plus some flexibility in how it's taxed, is why it's the go-to choice for founders setting up in the US. The catch is that the same LLC still has to follow its state's rules, get a federal tax ID, and meet US tax and reporting requirements, no matter who owns it or where they live. So forming it is the easy part. The upkeep is where you'll want to pay attention. So here's a step-by-step path on how to get started with an LLC from outside the US. Step one is choosing a state. Your LLC gets registered in a single state, and that becomes its legal home, even if you never actually go there. For non-residents, 2 states come up over and over. Delaware is the traditional choice, especially if you think you'll raise venture money down the road or convert to a corporation later. It's got decades of settled business law, it doesn't tax income earned outside the state, and it doesn't put member names in public filings. Filing costs around $90, and LLCs pay a flat $300 a year, due each June. Wyoming has also become the favorite for people who just want it cheap and private. There's no state income tax, no franchise tax, owners' names stay off the public record, and there's not much to disclose. Filing is about $100, and after that, it's $60 minimum each year for the annual report. One thing I'd warn you about, don't pick a state by accident. California, for example, charges an $800 minimum franchise tax every year, which can wipe out whatever you saved on a cheap filing fee. Pick based on where you'll really operate and raise money, not on the lowest number you see. The second step is naming your LLC. The name has to be different from any other registered businesses in that state, and it has to include LLC or limited liability company in the name. You can check whether a name's available on the Secretary of State website before you file. The third step, and this is really important, is hiring a registered agent. Every US LLC, or business for that matter, has to name a registered agent in its home state. That's a person or a service with a physical address in the state who can receive the legal documents and the government mail for your company during business hours. If you don't have a US address yourself, this is the thing that's most important. These services usually run somewhere between $50 to $300 a year depending on who you work with, but you do need one. Step 4 is filing your articles of organization. This is the document that actually brings your LLC into existence. Some states call it a certificate of formation too. You file it with the Secretary of State, pay a fee, and once it's approved, your company exists. It usually lists your company's name, the registered agent and their address, who's organizing, which can be from anywhere, and whether it's member managed or manager managed. Most states let you file online, and Wyoming and Delaware are both pretty quick, often just a few business days. Faster if you pay to expedite. Step 5 is creating an operating agreement. Think of an operating agreement as the internal rule book for your LLC. A lot of states don't make you file it, but it matters anyway. It lays out who owns what, how profits and losses get split, how decisions get made, and what happens if an owner leaves. 2 practical reasons to have one, even if you're the only owner. US banks often ask for it when you open an account, and it helps show that the business is genuinely separate from you, which is part of what keeps your liability protection solid. Step 6 is getting an EIN, which is your employer identification number. It's basically a tax ID for your business from the IRS. You'll generally need it to open a bank account, file taxes, or hire anyone, but it's not always required. For non-residents, this works a little differently. If you don't have a US Social Security number, you can't use the IRS's online tool. Instead, you fill out IRS Form SS4 and send it in by fax or mail. The form has a spot for foreign applicants. Where it asks for your Social Security number, you just write form. It's a manual process, so give yourself a little extra time. Step 7 is opening a US bank account. For a non-resident, this is usually the hardest step because a lot of traditional banks still want you to come into a branch in person, which kind of defeats the purpose of forming remotely in the first place. It's worth doing right though, since keeping a business money separate from your personal money is part of what protects you legally. This is also the step where newer platforms have changed things a lot, and I'll come back to that at the end. The 8th step is staying on top of taxes and reporting. By default, a single owner LLC is what's called a disregarded entity. That just means the LLC itself doesn't pay federal tax. The income passes through to you. If there's more than one owner, it's treated as a partnership, unless you choose otherwise. There's a concept called effectively connected income, which is income tied to a US business. If your income is effectively connected, it's generally subject to US federal tax and reporting. If it isn't, it may be treated differently. Which bucket you fall into depends on the specifics of what you're doing with your business. And if your home country has a tax treaty with the US, that treaty might reduce or even remove some of your US tax obligations, again, depending on your situation. These rules get really specific and complicated, as you can tell, and this is exactly the point where paying a cross-border tax professional might actually be worth it. There's one filing I want to call out specifically on its own. If you've got a single owner LLC that's foreign owned, you're generally required to file something called Form 5472 with the IRS every year. It reports transactions between the LLC and you as the foreign owner, things like money that you put in or take out of your business. The part that catches people up is that you have to file it even if the company made no money and owes no tax. People assume that like a quiet, inactive company is nothing to file, and that assumption is what generates the penalty notices. And the penalty is big. It's $25,000 for failing to file, per form, per year, with more piling on if you ignore the notice. As of 2026, the IRS has started assessing these automatically, and banks share more account information with the Treasury than they ever used to, so a missing form is easier to spot now. The good news is the fix is cheap by comparison. Just file it on time every year, even in a year where nothing happened. So is forming a US LLC actually even worth it? It's not automatically the right move, but it can pay off in a few specific ways. First, it can open doors with US clients, vendors, and payment processors, some of which prefer or flat out require a US entity, an EIN, or a US bank account. Running through a US company can also make you look more familiar and established to American customers, and it can get you into US brokerages or investment platforms that want a US entity before they'll open certain accounts for you. On the cost side, beyond the filing fee, you're usually paying a registered agent, annual state fees or franchise tax, maybe a business license, professional help for taxes and compliance measures. For non-residents specifically, it can be expensive, and on top of that, you're opening the bank account, handling the federal reporting, and the whole thing can take longer and cost more than the first filing fee really suggests. Forming a US company doesn't wipe out your taxes back home either. Depending on where you live, you might still owe tax on your worldwide income or have your own reporting to do there. So weigh both sides before you jump in. So here's where Slash comes in. Two things that cause the most pain for non-residents: opening a US account from abroad and figuring out whether you even need a full US company just to get paid in dollars. If you're outside the US and mostly just need to hold and move dollars, the Slash Global USD account gives you a US account and routing number without forming a US entity at all. It's built for businesses based outside of the country. You can hold, send, and receive dollar value with it, plus even move crypto. For some business owners, it takes away the reason to incorporate in the first place. And if you do go ahead and form an LLC and get your EIN, the full Slash platform opens up, and you can apply online in about 10 to 20 minutes instead of flying to a branch. That gets you FDIC insured business checking, the Slash Visa Platinum Charge Card, which charges up to 2% cash back on eligible US spending. You get payments across a range of rails, ACH and international wires, and faster options like RTP and FedNow. There's Treasury, built-in support for crypto, separate virtual accounts, and sync with accounting software. Thanks for watching. If you want to try Slash, the link is in the description. You can apply in under 10 minutes and no US LLC is required. And if you found this helpful, hit like and subscribe. We publish guides like this every week on running a smarter, more modern business. To see more of my content, read our blog at slash.com/blog, where I've written over 100 articles to help business owners better manage their money. See you in the next one.